Hey traders, Jason here from Lev Brothers. So in this video I'm going to talk about similarities between the internet top in 99-2000 and what is currently playing out right now. I'm not predicting the market's going to top and fall 50%, but any type of literature you read, any studies, any research you read about the market will tell you that when the leaders are in trouble, the market is kind of in trouble too. So it pays for us to check out the leaders. What are they doing? What kind of signals are they flashing? If they can't keep up, then what's going to keep the market up? So again, I'm not predicting we're going to have a repeat of the dot-com bubble top, but it is worth pointing out similarities. You can make your own judgment call. So first I'm going to go through some charts from 99, 2000, 2001-ish. Just to show you what I'm looking at, and then I'll fast forward to today to show you how the charts look similar. All right, let's get to it. All right, so here is the S&P 500, 99-2000. You can see it topped in March, it dropped back down, chopped its way up, and nearly matched its high later on that year in August and September. Now let's superimpose a bunch of charts, a bunch of leaders from back in that day, up-and-coming stocks, hot names from hot groups, picks and shovel stocks, you name it. Let's go through some names so I can show you what I'm looking at. All right, so here is the S&P 500 versus Amazon, and you could see that when the market went higher high here, market, of course, is in blue. Amazon was already a bunch off its high. And when the market dropped and then rallied into the end of the summer, Amazon was just down even more. So Amazon was this up-and-coming company. Hot name, did great after going public. But as the market was moving up and challenging its highs, this stock was down a lot. It had already gotten cut in half. Okay, so it was one of the leaders. It was like front page newspapers, front page internet. Everyone was talking about how this is one of those stocks, must have stocks, etc., etc. Of course, we know now that was true, but at the time, the market was doing fine. It was moving sideways, but Amazon had more than gotten cut in half. That was a major warning, and of course, the market got clobbered after that. Here's Cisco, one of those picks and shovels types of stocks. Matched the market's high in March. Market dropped and then came back up and nearly matched the high, but you can see Cisco fell even more, the red line, then it bounced and flatlined. So you can see this gap here in between the two. So the market moved up to its high. Cisco is not able to match the movement. This was a leader. This was one of the backbones of the internet. If these guys weren't doing well, then the market wasn't going to do well, and that's exactly what happened. So the inability of Cisco to match the market's high was a warning. eBay, another one of those, they got this new business model. They're going to do auctions. They're going to do other stuff. So, match the high back in March. Market falls, recovers. eBay just falls more, does not recover at all. You get a bounce here in the fall, but you can see the huge gap between the market near its high and eBay, which had basically been cut in half. So it was a warning. Here's a hot stock. It's supposed to do great. It's one of the leaders. It's going to just be a hot name going forward. It's the new way of doing business, and yet the stock got cut in half. Microsoft. So, PCs obviously in the 90s were huge. Instead of being a niche product which very few people had, businesses had, but very few people had, there's going to be a PC in every single home. Every single PC is going to have Microsoft software downloaded on it. So it's a warning when the market goes higher, Microsoft lower high, market goes up towards its high, and Microsoft got crushed over here, bounced a little bit, but look at this huge gap. S&P near its high, Microsoft over here was like 35, 36, and by the time the fall rolled around, it was like low 20s. Okay, so we're talking about down 40% or so while the market was at its high. That was a warning. Okay, last one here, Qualcomm, same story, market going up new high, Qualcomm lower high, market recovers back to its high, and Qualcomm had dropped and flatlined, nowhere to be found. Okay, Qualcomm over here was low to mid 50s. Down over here, we're talking like low to mid 20s. So more than got cut in half. Okay, market trying to recover, doing a pretty good job. Qualcomm nowhere to be found, got cut in half. So these were the leaders of the day. These were stocks that produced big winners. You can see that like the red line here is Qualcomm. Look at this move it made. Huge move. It was a leaders. You had to be in it. If you're a trader, if you're an investor, you had to be in a stock like this. Could not be in it. And yet market near its high, stock got cut in half. So when the leaders don't lead, when the leaders stop leading, that's a warning. Okay. So now let's look at what's going on today. So here's today's chart, going back to last June. So basically coming off of, this is a little bit off of the tariff low. Obviously big rally here, flattened out. I did a video similar to this back in January, February. You should check it out because I compared charts to this time period. You can go check that out in my YouTube feed. Market got hit hard here. Not too bad, but pretty hard for a 1 month drop. And then that it recovered, and now it's basically been consolidating ever since. So let's superimpose some charts onto this chart to see how, what today's leaders are. And of course, today's leaders are going to be AI stocks. Okay, they're going to be the hyperscalers, whether it be Google, Amazon, Microsoft. They're going to be data center names. They're going to be memory names. They're going to be storage names, optic names. This is the entire AI ecosystem that's being built out. How are they doing? Market's not that far from its high. How are the leaders doing? That's the question we have here. All right, so here's the S&P versus APLD. Okay, you can see here APL, or the market's been flat over the last couple of months, and you can see APLD has fallen off huge. There's a huge gap here between the market and APLD. APLD is a data center name. Okay, if it's not doing well, then what kind of signal is that telling us? Okay, because it moved with the market, it's done really well over time. It's done fantastic. But if it starts pulling back, if most of the gains in the market are due to AI ecosystem, AI infrastructure being built out, when these AI stocks start pulling back, not keeping up, what kind of signal is that sending us? Okay, next, this is S&P versus Nebius. Okay, did great, matched the market. Even right up here where the market was near its high, Nebius is near its high. Now, in the last, say, month or so, S&P's sideways, Nebius got crushed. Okay, Nebius was up near 300 over here, and now over here it's like under 200 at its low. Okay, so what does that tell you when you have this big gap between what the S&P is doing and what an up-and-coming leadership name is doing? Okay, here's Google. Okay, certainly not a small cap company. S&P sideways. Google's been trending down for a couple months, and now we have a pretty big gap between what Google's doing and what the S&P is doing. Google is now unchanged, basically going back to the beginning of the year. Okay, so if Google starts falling off, what does that tell you about some of the other companies? Here's Wolf, another data center name, move with the market, doing really well over here, matching the highs of the S&P. Now the S&P is just taking a break, and Wolf all of a sudden just got crushed, got cut in half. Okay, so what does that tell us? Okay, if indeed the gains in the market are due to AI, what signal is being sent to us when these data center names start pulling back? Here's S&P versus AAOI. Similar thing. Very, very obvious. I mean, when you look at this is the same as Microsoft, the same as Qualcomm, the same as eBay. It's the same thing back in 2000 when the market was doing okay, it was moving sideways, yet beneath the surface, you look at some of the individual names that were supposedly like the hot names, the new leaders, and they were suffering big losses. Next up, this is SanDisk, big storage company. Did great, matching highs over here. Now S&P sideways, and there's a huge gap here between what the S&P is doing and what SanDisk is doing. Okay, when the leaders stop leading, we got to pay attention. Next up, NVIDIA, obviously the biggest, most respected, highest quality semiconductor company out there. It's worth noting that it too is not keeping up right now. There's a gap there. Okay, NVIDIA topped over here. S&P up, NVIDIA down here the first beginning of the year, and now the S&P is mostly moving sideways, and NVIDIA fell off. It bounced a little bit, but there's still a gap between its performance and the S&P's performance. Next up, Oklo. I showed this one back in January, February. This is an energy company, okay? Supposedly these data centers are taking a lot of energy from the local economies, so there's a push towards having data centers produce their own energy locally. Oklo is an option for that, but as you can see, man, the stock's gotten killed and is showing absolutely no sign of life whatsoever. The stock's down from the high here of 175 to here of $40, we're talking about down 75%. Microsoft again showed this one as an example back in 2000, 2001. It is a hyperscaler. They're spending a ton of money on AI, building out infrastructure, and you can see huge gap here. A couple more here. Amazon, another repeat from a couple months ago, and a repeat from 2000. Market high here. Match the high here. S&P basically sideways, but as you can see, huge gap between what Amazon's doing and what the market's doing. Okay, so this is a sign. This is, if real estate's doing well, healthcare's doing well, but like beneath the surface, you're looking and saying Amazon's not keeping up. That's a problem. Okay, that's a problem, because if most of the gains are due to AI, when the AI stocks fall off, then like what's going to help? What's going to keep the market up? Okay, last one, Broadcom. I'm beating a dead horse here. So many of these AI names, whether they're AI specific or data centers or energy or optics or storage or semiconductors or whatever, they're all telling the same story. Okay, now not everything is like this. Dell is holding up pretty well. AMD is pretty well. Hewlett Packard doing well. There's definitely some names that are doing well. But, as the old saying goes, is like as the leaders go, the market's going to go. And a lot of old timers will say, like, just follow the leaders. If the leaders are doing fine, then you're fine. And if leaders aren't doing well, then the market's in trouble. And right now, the up and coming names, some of these are pretty stable. They've been in business for a long time. But then you got some up and coming names that are like really hot, doing great. But they've started to fall off. And to me, that is a warning. So keep this in mind. If the market tries to shoot up here and real estate does well and if stables do well, healthcare does well, but like these AI names don't follow along. If they don't play at least a little bit of a leadership role, I'm going to seriously question the market's ability to run higher. Okay, it can move up, it can put a new high here, but if these stocks don't improve, market's not going too high for too long. All right, hope you got something out of this. We'll see you next time.